morning, it's Friday Eve. Welcome everybody to this edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. For those of you new to the channel, make sure that you click the subscribe button below, and would love to have a much appreciated like on the video. So let's go ahead and get rolling. We look at the same 10 to 12 futures markets every day, but we identify these areas and we leave our lines on the charts. It holds me accountable, it holds you accountable, and it lets us to see how markets really move and how these lines work over time. So let's dive right in. Looking first at the S&P. So today we are recording about 4 o'clock here Central, so up a little bit early today. I have a couple of things I want to get done, so I'm taking a look at the markets a bit early today. And looking at this, we are up about 7 points in the S&P this morning. Big sell-off yesterday after a rally up from the Fed meeting minutes, and then we smoked straight down, came back down to really the low that we had earlier in the week, and then stayed above there. So I'm actually going to look at this as a potential breakdown area later today. So this could be an opportunity later today for a breakdown on the short side. As far as what happened yesterday, going even to the 15-minute chart, we see that we definitely reversed this area here. There is a potential for a short somewhere up in here on a 15-minute time period. I'm going to leave it be. There's really nothing. I was telling this to a friend yesterday. We had a meeting in the evening, and I said, just because the market makes 20-point moves up or 30-point moves down, these big swings in between doesn't mean that I'm going to take them. And the reason that I'm not going to take them every time is because you've got to give me a compelling reason to get long or a compelling reason to get short. And right now, I don't have either one of those in any spots. So what I am going to do is put this area here as a potential breakout to the upside, just above 2659, call it 2660. Just above this area here, there's a potential breakout to the upside. But for right now, this upside potential, I'm going to leave it be and look for another look for what's going to be my better opportunity on probably some other markets, because there's no strong reversal trades here that I can see that are really exciting me. I will say that last night I looked at this before my head hit the pillow. I looked at this as a potential breakout to the upside, but I left it alone. Just didn't feel like there was going to be enough movement out of it to make it worth justify against the risk, and I kind of still feel that way. I don't feel like there's a whole lot there for me, so I'm gonna let that one be. There is a potential, that there's a breakdown below this 2624, but there's not quite enough room to roam on that one. So I'm gonna let both of those be for now, and let's take a look at the Nasdaq. Now, looking at the Nasdaq, here was our 15-minute level yesterday, and I put a tweet out yesterday. We got a really nice move off this 15-minute level. So taking a look here, this was our area that we identified yesterday. A little bit of basing, strong move away. Price came into this area, and then boom, we rocketed up hugely off this area, almost 50 points. Came to our opposing fair price value area, and then sold off. And what I put in the Twitter feed yesterday was, it's coming back into the area. If you want to take it again on a second shot, be a lot more cautious, because I didn't like the way it was coming back. So the way that it came back into this area, it came back with a fair amount of strength, but because we had traded into this upper level the first time, I did not look at it the second time as a great opportunity. Nice reversal on the first move. So a nice little trade off of that first move, but not a setup for the second time around. Now, looking at this going forward, one of the things that I spoke about yesterday to somebody was this area up here. A lot of people would look at this area here as a potential reversal point, and I'm not going to do that. I'm going to leave this area as not a potential reversal point, and here's why. Reason being is where these two wicks overlap each other right in here. So you have a wick that's right here and a wick that's right there. And then where those two wicks overlap, there's a little bit of buy and sell fair price area right there that could be an opportunity. However, if we look at this next green candle, there was a wick that traded up into that area before price then fell away. So looking at this, you know, some people would take this as its own area, the lower one. Well, this lower one is really just a reaction to this area up here. And this area up here has already been used. And when I say it's been used, I mean that any remaining sell orders from this area were touched right here. And so this is not its own authentic collection of selling. It's a reaction to a prior area. So what that means to me is I'm not going to use either one. What that means to me is that both of these become lower probabilities than I'm willing to take, and so I'm gonna get rid of both of them. I am gonna take a look though today at a short below this area here. Now, why do I look at it here that I didn't look at it in the S&P? Well, in this markets, you know, this is actually a little higher than what the S&P one would be. And I think that if we break below here today, below the 66.25, then I think there's room for it to run all the way down to 65.42. This area right here was tested and retested all through this. So I think that there's a chance we'll break through that. And my stop would be here. Now, if we do break down below here, your stop has to be above the last pivot high. So if we go up today and then come down, you might have a fairly wide stop. And if you're not willing to take that much risk, then maybe this trade isn't going to be the right setup for you. There's other ways to take advantage of this trade. But the key is you don't want to change your risk tolerance in order to make it fit, you know, what you want to do. So I think that's a decent shot today for a short below that area. Crude oil. So crude oil yesterday, you know, when we came down into this area here, yesterday we traded down into this region, and I actually had a trade set up below the 66.87, and I said, yes, it's finally going to break. I'm excited. I can't wait. We've had this line here now for 6 days, and it didn't break. And so by not breaking, still an opportunity. Level didn't go away. The more it's touched, you got to think it. Every time it comes into here, the more it's touched, the more we're eroding any of those of the inventory of orders that existed here in the first place. And so what I'm looking for is my bounces each time we get into this area are getting smaller. What do I mean by that? Well, the first time that we touched this area, we bounced up this much. The second time, we bounced up this much. The third time, we bounced up this much. The fourth time, we bounced up this much. This time, we bounced up this much. So we're getting less and less of a bounce typically every time. Now, some more orders are definitely being added to there because there is, you know, increasing momentum on a couple of those. But for the most part, I still think there's a breakdown short below this area here. I'm also going to look for, you know, this is range-bound trading. And when you're range-bound trading, you've got tighter windows. But you could get a reversal up here as well. Once again, range-bound trading, tighter windows. So I'm going to change this to a dashed line. And I use the dashed line when I'm in those tighter windows because I really need to be sure. This one, I'm going to put it here. We're going to leave it there. I'm not as confident about it as I am with the breakdown below. Gold. So yesterday in gold, we had talked about breakouts out of this little triangle pattern here, and it broke down right to its opposing fair price value area before then hitting. So this one worked out for a nice little profit if you were able to make sure that you closed it out at its fair price value area, the opposing level. And had it broke out to the upside, your profit target would have been about here. And then later in the day, I saw it rising up. I was like, yes, here we go. It's going to happen. It's going to It didn't happen. We came close, but no cigar, as it came really close to a fill. Missed it by less than a point. Missed our fill on this one by less than a point, and then it smoked straight down. And now we've almost come back to it yet again. So we're going to leave this area in play, and we'll see if we get to that one today. Nothing really more to add on that. This little area here, we came back and touched it in the overnights. This could still be a little opportunity. I'm not a fan of when it was created, but the fact that we did a touch and go off of it means that there still may be some buy orders and some opportunity in here as well. Next, bonds and currencies. So in our bond market, let's take a look at the ZN, which is our 10-year note. And so the bond market, we had this little setup in here. We said, well, if price comes in here, you may get a bit of a reversal. And I was completely wrong. Price came into this area, gave us our little touch, and then blew right through it. So this one is a stop out for a small loss. Good one is a really small loss because it was a really small area that we had identified. And I kind of felt, if you remember from yesterday, I said that we may be forcing this one a little bit, and I was. But that's okay. I'll take a small loss like that whenever they come around. But that one, and there's nothing really more for me to add onto the bonds today, as that level just didn't work out. Next, the Aussie. So in the Aussie, we had a reversal off this area here, as everyone can see, that we touched it, smoked down off of it, and now we're just about to that area again. So since we're just about to this area again, where would our next opportunity be? Well, I gotta tell you, it might be if we break above it. There could be an opportunity to get long above this area here. It was a short breakdown below this area here, and now it could be a long above this area. So keep this area in mind. Let's see, I'd like to see us bounce here a little while before we break out above it. Wrong markets. Euro. Now, in our euro trade, so let's take a look at the euro. So the euro, we had a breakdown below this line here, and we came down into it, and it started to move our way, and then my guess is it probably gave us a stop out because it's above our prior pivot. It broke down, feeling good, all good in the neighborhood, as Applebee's would say, and then it broke above, gets us a little bit of a stop out, and then breaks down again, and now it's chopping around. So if you got stopped out on this one, you may have taken a small profit. I don't know what you were looking for. Some of you may have taken a small profit on it. Some of you may have taken your stop and moved it to break even once you had a little bit of a profit. Or you may have been stopped out. So I'm not sure how you managed it, right? And that's why I did have somebody ask me one time why I don't keep a list of results. And the reason I don't keep a list of results is because everyone's going to manage these trades differently. There's no, I know a lot of people will tell you, well, I have 86% winners or 59% winners and blah, blah, blah. No, I'm not going to do that. And the reason I'm not going to do that is because I don't know how you're going to manage the trades. All I can do is look at solid entries, and then manage the trades as we go along. This is a great example of it. Everyone's going to have different trading rules, and I didn't take this one. This one didn't cross my radar yesterday because I already had 3 other things in, and so you're not, just because the trade's on here doesn't mean you're going to take every single one of them. And this is an example of, had you gotten into this one, if you're monitoring it and you're watching it, you may say, well, we broke down below. It's not doing anything for 1, 2, 3, 4 hours, and I've got a Fed announcement coming. Maybe I should take my profits. So how do I record that versus something that did hit its target on the other side? Or maybe you did a set it and forget it, and before the Fed when the Fed announcement hit, it stops you out, and then it comes down here. So it's difficult to really gauge results because it's going to vary based on your risk tolerance, and this is completely an educational example on primarily on entries, so much more. And so that's kind of what I put in here. I think it's important to understand how you would manage your individual risk in your individual trades. Canadian dollar. Still, it's a snooze fest. And my guess is that the Canadian dollar is not moving because it's playoff season in hockey, and the Canadians are just watching hockey all day. So my students up in Toronto, up in Vancouver, Montreal, maybe you're just watching hockey. And if you are, please root for the Penguins. All right. Last but certainly not least, Great British Pound, Japanese Yen. So in our Great British Pound, we had this little long setup right here. Price said, hey, I'm going to get you in. I'm going to get you in. Psych. And came close, but no cigar. Literally missed by about a tick before, and then prices rallied up out of it. Now, we didn't get a great rally out of that area, so I'm a little bit less confident in this zone. And so what I'm going to do is I'm going to change it to a dashed line because of my lack of confidence in this area, since it was just a touch and go. But I still think that the area could have some validity to it. Japanese yen, we're coming close to our potential short right up here, so keep that area in mind. All right, so kind of recapping for the day, just make sure that you're following your plan and following your rules. Hopefully that little lesson I gave on trade management makes sense to all of you. My best opportunity I think today is going to be just to follow the rules of the levels and the trades that we have in place. Those areas have been there for a while. Let them do their thing and allow them to follow through. And if you get a stop out, you get a stop out. I love my stops. I love my stops. I love my stops. You should say it every day, because for every day that you get a big winner in the Nasdaq and then you take a small loser in the bonds, you'll be okay with that as long as you are following your rules and following your plan. So I know I went a little long today. Hope everybody has an absolutely amazing trading day. Thank you so much for your time. If you get any questions, please feel free to send me an email, chuck@iiefinancial.com. I will see you soon.